What I want to do today, I want to show you guys a little bit of glimpse into how I determine the direction of the market and how I trade my NFP as well. Why? Because there's a lot of geopolitics going on. You know what is happening in Russia, Ukraine, and basically with the US and China as well. So there's like a lot of momentum in the market. There's a lot of volatility. There's a lot of liquidity in the market. So when such things are happening, I perceive that what NFPs will usually go crazy. And so I've told community guys that they should fund their account. We're going to have a special group and then we're going to trade. So if you want to join that group, make sure you're clicking in the link in the description. Join the Coach Troy Telegram community. Join XNest. The link is also in the description. Fund your account. $100, $200, whatever it is, and make sure that you're in the group that we're going to be trading NFT together, because tomorrow is going to be crazy. So get on with me. Let me show you a lot of things. First things first, what I do, guys, I always come to this website, Forex Factory. You guys know it. It's been very popular. I've always used it, right? If you check here tomorrow at 12:30 p.m., depending on the time zone and where you come from, we have Canadian unemployment rate number coming, and then we have the non-farm payroll and the unemployment rate, which is like unemployment data coming in for the US as well, right? Now let's just restrict our focus on that of the US, which is the 1, 2, 3, right? Especially the third one, especially the last two. Non-farm employment change is basically new employment that the government has created in the US. Previously, they created 177,000 jobs, and then they are forecasting that they're going to create 127. And then for the unemployment rate, which are people that are unemployed in the US, previously it's sitting at 4.2, and people are anticipating that it's going to be the same because they don't expect that unemployment has eluded in the United States as much. So with these two data, we can align ourselves to anticipate where the market is going to go. Mostly what happens is that you could be possibly right on the data, you could be possibly even right on the numbers, right? But what happens is that the chart will usually act or behave in a particular way regardless of the data, right? So usually have something we call knee-jerk reaction. So there's always a reaction in the market instantly to fulfill the obligation of where the market anticipates the data to be, but after that it has some ripple effect of reverting back into the original trend. But there's a lot of dynamisms to look into when you're talking about this, so I'll show you more. So what happens is that people get confused when they see data of interest rate, inflation rate, unemployment rate, right? And then they expect that as a positive data they're all going to go in the same direction. No, unemployment rate is a negative data for the country. Means that how many people are actually losing jobs. So it means that if you have unemployment number or the percentage increasing is a weakness for the dollar, and if you have the unemployment number decreasing is a strength. It means that a lot of people are being. So we don't actually want to see this number increasing. We actually want to see it stabilized or decreasing. And if you see that it's stabilized, as the forecast is showing here, it may just not have a lot of reaction on the market, right? And in terms of the reaction, I'm talking about how the DXY is supposed to behave, right? But as a speculator, there are so many dynamisms that I first look at. Currently, the chart you're watching here is DXY, right? The dollar index. And you can see that what technical wise, the dollar index is making its way to start going up. If you watch clearly, you can see that this is the support level that the DXY has been hitting. This is a 98.68 region, right? It hits here first as a support, came back to test that region, failed to break, and currently is sitting here as well, right? And you can see that what with all of this is more presupposing that what we are yet to see some signs of what strength in the dollar, right? And if we're trying to see some signs of strength in the dollar, we have already justified our position, or we've already juxtaposed our direction in the market. And after juxtaposing or justifying, we will need to make sure that it aligns with what we expect technically. If you come here as well, you can see that with 4.2, that means that people are expecting the data to be stabilized. That also kind of gives you a clue that what forecasters, which is analysts on Wall Street, are not really expecting unemployment data to be that bad. They are expecting it to be stabilized. But that also sends a message that at least they are not saying that the economy is going worse. But that means that for a real data, it could be geared towards a positive data, which is like a lower unemployment rate, which will inevitably then lead toward a strength or a signal of strength in the dollar index, which also in ripple effect show strength in dollar crosses. So you see that simple analogy that I did. This is how you speculate, right? As a speculator, you need to add a little bit of wisdom and thought in all your processes. Also a bold call, right? You cannot speculate based on data that is already proven. Then that's not speculation. You get what I mean? So how I was just like, more like plotting and planning and intertwining data. That's how you always got to do it. And that's how we as pros trade on NFP, right? So I've already showed you, like I said, the analysts, the Wall Street guys, they are not anticipating the number to be bad. They're expecting it to be stabilized, which means that worst case scenario, I would expect that it will be the same or it will even be better. And the DXY is already showing that what 1, 2, 3 held on this support, so it's possibly going to go up, and which has already started printing the candle patterns that are already showing signs of strength in the dollar index. So I'm expecting that what this will probably go. But you see how this is going to probably start waiting for the real data to be a catalyst for the market to actually prove this theoretical aspect or this practical aspect or technical aspect of the market, which is like the support level holding. One aspect that I learned very early on as a trader is the fact that the market always dances to its own tune of music, which is like technical will always align with fundamental, right? The market has a story it is telling. And if you watch, you can backtest this in so many of the charts where you'd see like a market hits a previous support level or hit a previous resistance level and will be lingering around there for a while, maybe drop a little bit of a 10 pip, 20 pip move, but will just be stalling there until a major fundamental comes in and it pushes it further down. All that means that the market is waiting for the fundamental to be a catalyst to drive the market in the direction that they expected. So similar to this, that's just what I'm expecting. Normally, apart from this technical perspective I've given you, what we observe in NFP is that yes, there are times where the market will react, let's say assuming that indeed this market or the data came out and then it was a strength, it was showing strength, which is the unemployment data decreased, right? Normally the type of reaction you'd have is like, okay, an instant push on the upside, right? And when the market push on the upside is showing that indeed it has fulfilled the NFP data, which is like the signs of strength that we're expecting the data is exhibited. You go on to realize that after some time, there are moments where all that strength that was shown just literally reduces back to the original position, and sometimes after reducing back to the original position, there are also certain price action that takes it back and even further than that, right? These are things that you need to have been on the market for so many years to be able to observe. There are also situations where the market will show that sign of strength, but what will happen is that it will actually just drop in the opposite direction because it knows that a lot of retail traders are anticipating and speculating around that range. Drop, take out their liquidity, come back into this range, consolidate a little bit before moving all the way up. And all of these, you need to have interpreted the data within that time frame and also observe price action and candle reactions around this range to be able to quickly react and take on this move. And these are things that you cannot teach all in one episode like this, but I've given you guys a little bit of the tricks. But if you want to take advantage, you first need to be in the group, because after I demonstrate practically how you can take advantage of that, I can also go into the thought process of some of the decisions that I make. So make sure to click in the link in the description to join the Kojo Forex Telegram community, and make sure to also participate in tomorrow's NFP. This was a teaser and I know you guys got the message. I'll see you guys in the next one. Before I leave you, follow me on all social media at KOJOFOREX. Peace.